Welcome to Institutional FX Uncensored, your free weekly FX podcast. Listen to professional FX traders, currency hedge funds, and FX brokers from around the globe discussing the latest FX news, trends, and regulations. Be ready to navigate through the uncharted waters of the foreign exchange market like no one else has. Tune in.
Welcome to the first Virtual FX Hedge Fund Expo brought to you by Advanced Markets Group. Advanced Markets has been creating unique DMA pool of liquidity for hedge funds, family offices, asset managers, and high net worth individuals since 2006. My name is Raphaël Ribocourt, and as Vice President of Institutional FX at Advanced Markets, it is my pleasure to introduce you to our first panel, which will discuss currency hedge funds in 2020, success stories, and the best places to launch. And I am happy to pass the microphone to our moderator for this panel, Dave Shasti.
Thank you, Raphael, and good morning, good afternoon, good evening from wherever on the planet you're attending this event. My name is Dave Shastri. And like all of the other panelists who I will ask to introduce themselves in a few minutes, we are all participants in the industry. We have all worked with the managers of funds in establishing those funds in the past and in the present, continuing to help managers do that. And so the purpose of this panel is to give you some guidance or the benefit of our experience about some of that process of launching a fund, where you may want to do that, what jurisdiction you may suit your fund, or what jurisdictions may suit the fund that you're considering. One of the things that you need to consider, of course, when you're doing this is that a fund is a business, and these are business decisions that you're making, and so that the identity of the fund is also taking on some of the identity of the jurisdiction that you're using. So that's part of what we'll be discussing today. First of all, what I'd like to do is bring up a first chart just to give us a little perspective on jurisdictions and launches. The first chart here shows something of what we've been seeing during the last several years in terms of fund launches and closures. You'll see that fund launches, we observed slightly more funds dissolving than launching in 2019. We wonder, of course, what the effect will be in 2020, particularly resulting from the pandemic, and how that is affecting managers and funds, and the obviously economic situation that has resulted in the markets. Of course, we also have a considerably greater amount of activity, volatility in the currency markets now, and how that indeed might relate to the participants on this presentation. In the next slide, we also can see that there are a number of jurisdictions that managers use to establish their funds. There are lots of different reasons for this. We'll get into that in the course of the event, and we hope that that will help you ask the right questions of your service provider, of the firms that you work with when you're looking to establish a fund. It will give you some insight. Obviously, there's only so much we can give in terms of an hour, but there are certainly a number of different jurisdictions. You'll see that, of course, the U.S. has the largest number. Those are a number of onshore funds, of course, set up. And then what is usually considered the offshore world, Cayman, Luxembourg, Ireland, BVI, amongst those. And today we have participants that will talk about those jurisdictions, and also Malta. It's another European jurisdiction. So before we get into the detail of our discussion, I'd like to introduce to you our panelists, and I'd like them to introduce themselves, actually. First of all, could I ask Clive Snowden to give us a brief introduction of himself and what he's doing in the industry?
Thanks, Dave. Morning, everyone. My name is Clive Snowden. My company is Draycliffe. I work as a consultant to the hedge fund and fund industry. My background was fixed income and risk before setting up my first hedge fund in 1997, when nobody knew what a hedge fund was, including me. I set up 2 hedge fund managers in London over 7 years before moving to Switzerland, and then I moved into fund of hedge funds with a company called Gotex. I built the infrastructure for Gotex and many of the products, which took it from a couple of 100 million when I joined up to 7 billion within 3 years. I then went across into the dark arts of the fund services side as I became the chief exec of the Credit Suisse fund services business in the Channel Islands, looking after the whole of the Credit Suisse hedge fund portfolio of 50 billion, plus about 20 billion of other alternative assets. I work from London, and I now share the love of all of the expertise that I found from working in the right across the spectrum, from the single manager, multi-manager, and service provider. And I'm working with fund managers, small, medium-sized typically, but also fund service providers and some of the largest of those. All structure and strategy. So it's all about how to create what needs to be delivered and how to build your business. As Dave said, it's a business. Your fund is a business, not just a fund and an investment portfolio. Thanks, Dave.
Thanks, Clive. Thank you very much. Rebecca Schwarep, thank you for being on this panel very much, and be grateful if you could introduce yourself.
Yeah, thanks, Dave. So good morning, afternoon, everybody. My name is Rebecca Schwarep, and I represent Bank of Valletta Fund Services. We're Malta's leading fund administrator and a fully owned subsidiary of the Bank of Valletta Group, which is Malta's largest banking group. As BOV Fund Services, our core services lie in the fund administration. So we provide calculation of NAV, maintenance of shareholder registry, preparation of financial statements, and all other back office and regulatory reporting that is required for a fund. So company secretary, registered office, regulatory reporting, and more. But in the step before that, we're also very active in providing what we refer to as a one-stop turnkey solution in assisting fund managers and promoters in setting up their funds and asset management operations in Malta. So we handle the entire process, liaising with the regulator, with the clients, with the legal team, and all involved parties to get the fund licensed and up and running.
Thank you, Rebecca. Sam, you're up next. Sam Bracci from Ifina Group.
Okay, good morning, everybody. My name is Sam Bracci. I'm founder and MD of Ifina. Ifina is a mutual fund administrator, and we specialize in providing fund solutions to startup managers principally. My background is I've been in the financial industry probably for 35, 40 years. Initially, I was in investment management. I was a London-based manager for an Australian family office where we had 1.5 billion in management. I then moved into the fund administration side for the family office. I set up Ifina in 2000, mainly to offer the startup managers with a low cost but an all-inclusive fund solution. And probably 85-90% of our clients are startups. So we offer them one-stop solution. So we set up the fund for a fixed price. Our markets, and then we act as the administrator, registrar, transfer agent. Our main office is based here in the UK, where we do most of the work, but we have an office in the BVI and one in Singapore. Our main jurisdictions are Cayman, BVI, and Malta for an EU solution, but probably 80% of our funds are Cayman funds. One, because it's for an offshore jurisdiction. It's the largest offshore jurisdiction. Probably 75% of the world's funds are based. Hedge funds are based in Cayman. Also, it offers a lower regulatory regime, although it's last few years it's getting a lot tighter. And from a cost perspective, it's a lot more competitive than, say, Malta, where we have a fund platform as well. Yeah, and that's really our business. We tend to offer a bespoke service, so we do everything for the manager. And as Dave mentioned before, the fund is a business, and most of the managers come to us. They don't understand the business. they don't understand the fund business, so we tend to hold their hands and we walk them through everything. And then on an ongoing basis, we take care of everything. We take care of the registry, the treasury, the NAV calculation, and they just get on and trade. And that's basically our business. We're very specialist and bespoke for the startup manager.
Thank you, Sam. And Mark Shaw, thank you, from Wilgen. Please introduce yourself.
Good morning. Okay, well, thank you, Dave. As Dave says, my name is Mark Shaw. I'm a partner in the investment funds practice group at Vilgen, which is a full-service Luxembourg law firm, although I head the office here in London. We represent clients across pretty much all investment strategies and scales in the full life cycle of their fund launches and anything around that and any other issues that may come up in Luxembourg. Prior to joining Vilgen, I worked in-house at a number of fund management businesses where we'd go from the earliest stages of setting up funds and management companies through all of the legal and regulatory aspects of launches, all ongoing matters relating to the management, governance and global distribution of funds. The funds I launched when I was in-house were both onshore and offshore. So I'm relatively unusual in that I've worked across pretty much the full range of sort of fund jurisdictions. And even now working as a Luxembourg firm, I find that many of our structures actually cross jurisdictions. And as a firm, Vilgen tries to differentiate itself from its peers in Luxembourg by taking a more commercially pragmatic approach, being more solutions orientated and offering a more Anglo-American service model.
Thank you, Mark. And we'll get right back into Luxembourg in a second. Before that, however, what I'd like to let you know is that we're going to open the first set of poll questions for our participants. And so we hope that you'll respond to these. They'll be very helpful to us and to you to get an understanding of your thinking on jurisdictions, what you know about them, what you may not know about them, and I hope that would be helpful. So my name is Dave Shastri. As I said, my background is I've been in the hedge fund business since 1992, which sounds like a long time, in the Americas and then in Europe, and certainly I've worked across all jurisdictions, including Asia. Currently, I'm a technology and services provider, so my business is the providing of front, middle, and back office technology to investment managers of all shapes, and also providing the operations outsourcing for their internal operations so that managers can outsource some of the things that would typically be done, including portfolio operations, that kind of thing, and sort of scaling up their business. So that we work with managers of small, medium, and large sizes. Okay, so to move on, Mark, you started with Luxembourg. Let's talk a little bit about Luxembourg. Luxembourg, according to Eureka Hedge, one of the data providers in the industry, has gained a significant number of hedge fund registrations. So in 2018, 6.5% of hedge funds were registered, making it a leading European jurisdiction. What's attractive about Luxembourg for a hedge fund manager?
Thanks. Well, I guess I'd like to start by saying when people come and talk to me, I try not to push Luxembourg too hard as a hedge fund jurisdiction, because as you'll see, it is right for a lot of fund managers, but there are often instances where it's not right for them. And so from a long-termist perspective, I think that's an important thing to sort of set out at the outset, because there's no point going into a jurisdiction and then finding out it's not right for you and having all those issues that come as a consequence. And also, these fund structuring decisions are a function of things like tax, cost, and distribution. And this is where I guess things fall to Luxembourg, because whilst Luxembourg has a reputation as being at the more expensive end of the scale, and in some cases there's a kernel of truth to that, there are technical advantages that offset this. So I think first and foremost, there is a full range of flexibility of fund vehicles. So depending on your investment strategy or wherever you decide to fit, or where your liquidity profile is, or what kind of sort of tier of regulation you want, depending on your investment requirements, there is something to fit you. So there is an incredibly wide range of fund vehicles. And in with that, these are also the tax structures that go with those. So whether it's at the fund level, which is incredibly tax efficient, or whether you have to intermediate those investments on an underlying basis. So that's the first point, is the fund vehicles. The second point is the tax regime. So it isn't, and I know, Dave, that at the beginning you mentioned, you referred to Luxembourg from a US perspective, so therefore as an offshore jurisdiction. As an EU person, I would consider Luxembourg to be an onshore jurisdiction within the EU, and it has a very wide network of double taxation treaties. So I believe there are about 82, which minimises overall tax leakage, which in turn should more than offset any negatives in cost, because what you should look at this is in the sense of the sort of total expense ratio of your fund vehicle. And the final sort of technical advantage is Luxembourg is a very unusual country in this. It's this little enclave in Europe, but it's incredibly stable. It's got a AAA rating, and it's basically founded on, or has become founded on, I should say, since its sort of post-steel industry, on its fund services industry. And as a consequence, that should never change. And it's not alone in jurisdictions, obviously places like Cayman and Bermuda and Malta are very similar. But because of the fund services industry being so crucial to its success, there is a level of guarantee looking forward that should remain the same. And then I think there are some softer factors. So there's a virtuous circle point, which is, because it's been successful, it's attracted all of the leading services providers. And that doesn't necessarily mean all of the big ones. It can, they work across a full range of cost and scale and type. But because they're all there, it continues to fund growth, hence the virtuous circle. And then finally, there's a degree of global brand recognition. So principally in the UCITS space. So Luxembourg funds are fairly recognizable across the world. And again, that really helps. And the local vehicles and local sort of quangos in Luxembourg have been very good at promoting the jurisdiction on a global basis. So again, that helps them to become more distributable, and it sort of feeds itself in this sort of growing cycle.
Excellent. I think it's great that you pointed out a couple of key things. That there's the investor side of this, which may include regulation and may include tax, but there's also the investment side of this, and that may include some of the benefits of the double tax treaties that Luxembourg has, on top of all the other things that you've described about the jurisdiction itself. So there are reasons on both sides of the balance sheet of your portfolio of your fund to think about this as a jurisdiction. So Rebecca, I'd like to move on to Malta and hear a bit about Malta. Of course, another European regulated jurisdiction, and so it offers something a little different. We've talked about Malta, especially with regards to its professional investor fund. Perhaps you can tell us what it is about Malta, Rebecca, that makes Malta a little more unique.
Yes, absolutely. I mean, similar, if I may, to what Mark said, that in the way that they don't just push Luxembourg because it might not be everything to everyone. It's the same for us as well. I mean, Malta is not everything to everyone. We don't promote it to be that. But over the years, it has built this niche in the area, best servicing the small to medium-sized managers. And this was done through a number of homegrown regulation as well, including, of course, the professional investor fund, as you mentioned. The European Union is a level playing field within the funds industry across all the EU member states. So when we're talking about EU directives and the products regulated by such directives, this is the same for all jurisdictions. But when we consider other products that fall out of scope of these directives, as is the professional investor fund, that is where certain unique features come out. So if we look at the professional investor fund, we are talking about product that has less onerous regulations compared to other products. We are talking about the fact that there are no leverage restrictions, for example, no investment restrictions, no diversification requirements. There isn't even the need to appoint a custodian, for example, because safekeeping arrangements with a prime broker to safekeep the assets and execute the trades would suffice, or even a notary in the case of a real estate fund. So there's a number of factors of the professional investor fund which needing less regulation, needing less regulatory requirement, also allows the fund managers, especially the startup fund managers, to focus more on their core function of managing and growing, a startup and making it a successful fund. Now, all these features then coupled with additional flexibilities and additional features offered by the Maltese jurisdiction, such as cost competitiveness, time to market considerations, the pro-business approach of the regulator, can-do mindset of the industry, and all these features then create the right environment and an appealing package for particularly this niche that we mentioned of the small to medium-sized managers. On the other hand, if we have more experienced fund managers who are more concerned about, being able to passport their fund freely throughout the EU, have a quick time to market considerations there as well, then there are other products such as the notified AIF, which is another product uniquely offered by the Maltese jurisdiction, which is a fast track solution to launching a full scope alternative investment fund within a maximum time frame of 10 working days. So it does cater for both the sort of startup managers and the more experienced one as well, but the niche has been created mainly in the small to medium sized space. So that makes it mostly attractive for the startup managers, looking to start up and grow their fund.
Perfect. Thank you. And that I like the fact that what you've heard from both Luxembourg and Malta in terms of our presenters is that there's a responsiveness, certainly to a specific niche, potentially. They've identified niches that work with. So that increases the importance of understanding what you're about, what your vehicle's about, what your clients are about, and selecting right. Sam Bracci, I'd like to turn to you now, and obviously the most popular jurisdiction in the world being Cayman in terms of funds. And of course, there are lots of different reasons which for Cayman, but now we have AFIMs in the EU, alternatives being actually launched in the EU, competitiveness from the European Union itself, regulatory kind of scrutiny. So maybe you could talk a bit about what Cayman offers, what's usefulness of Cayman, and what that means for in the future, as we've seen the other jurisdictions talk now about being responsive to the needs of the managers.
Okay, sure. As I mentioned in my introduction, Cayman is our main jurisdiction for funds, although we're FCA registered and we've got a BVI license. Most of our client funds are based in Cayman. We specialize in the startups, so anything 50 million or less. And in reality, most of our funds start between 5 and 10 million. They're real startups. These are guys that maybe are managing their own money or they're managing managed accounts and they want to move into the hedge fund arena. And Cayman offers one, a low-cost solution, but also we can sell a fund up in 5 or 6 weeks from start to finish. We have platforms in Malta, which are very competitive. Also on the ongoing basis, it's a lot more competitive. And also Cayman being the largest offshore jurisdiction, it's recognized by all the institutions, so the banks, the brokers, the investors. We only deal with private and professional funds. We don't do any retail. So the banks, the brokers, the institutions, the high net worth individuals, the family offices, they all recognize the Cayman fund structure. You can actually recognize. So from a marketing perspective, and most of our client base is UK, Switzerland, Europe, there's not an issue in terms of promoting the funds. Also, the regulatory regime in Cayman, certainly over the last 18 months, is really tightened up. And that's been through pressure from the EU and also from the OECD. And they've had to tighten up their AML, their compliance, etc. at the fund level, which is a good thing. And so it's starting to harmonize now more with the EU onshore solution. And we have a fund platform in Malta. And as Rebecca said, it is, and we've got a NAIF platform in Malta, which is very efficient for clients wanting an EU solution where they want an EU passport under AIFMD. But Cayman tends to be the chosen jurisdiction, certainly for most of our clients, startups, because as I say, it's recognised, we can set it up quickly, it's low cost, it's fully regulated, fully audited, etc. And we just see it actually came growing more as a chosen jurisdiction from our perspective. Yeah, and it's I say it's well known as well, so it's not it's
exactly.
not like Nevis or something like that. It's a well-known, recognised jurisdiction with a long history.
So, thank you, Sam, very much, because what you've also pointed out is that and actually Mark and Rebecca have also pointed out is that because the industry is actually quite important to the jurisdictions that we're talking about, that they're responsive as jurisdictions. They address issues that may be deficiencies or need improvement. They have to know what they are, what they're for. But that's an excellent point. Thank you very much for that.
I mean, the offshore jurisdictions, well, Cayman, BVI, the impression was there were tax havens, so people were hiding money. That's not the case now. There's no secrets in the world now. There used to be lots of secrets, but after there's no secret. So everything is very transparent, and I think it's from our perspective, we're just seeing in terms of the number of Cayman funds we've got, just growing all the time. It's the preferred jurisdiction for startup.
Perfect. As you said, there's harmonization, certainly in terms of things like AML, all the various reviews that need to take place, CRS, FATFA, all these kinds of things. And so as a result of that, many regardless of the jurisdiction, you're certainly going to need to respond to this a very similar level of oversight over investor processes, for instance. Not in everything, obviously there are differences. Clive Snowden is consulting for managers that are setting up in using different jurisdictions, but also in other ways besides just the fund structure. So Clive, I'd like to ask you now to sort of give us a flavor of what managers are getting in terms of guidance in relation to the selection of the jurisdiction and also the structuring of the actual product, the documents, the actual vehicle that comes out of this. Obviously, our other speakers have reinforced that they're guiding clients based on what is best for them. But maybe you can give us an overarching view, Clive Snowden. Thank you.
Yep. Thanks, Dave. Well, for me, the overriding decision, I come from the manager side. I've set up funds in all the major jurisdictions. I was at one stage setting up numerous funds a year. So, and the reason for that is purely around what the investors want. That is the overriding decision as far as I'm concerned. I want to sell my fund, so I need money from investors. What do they want? I can't just build a fund and say, here's a fund, come and get it, because that's not how it works. So what are the factors that drive the investors to a particular jurisdiction? And you have to understand that. So that's where your money will come from. So Cayman's the default standard. As Sam said, everyone, it's well understood by investors. So that is the norm. So if you're not doing Cayman, why are you not doing Cayman is the way I look at it. Obviously, everybody has their opinion. And I would always start there. I used to set up a lot of funds in BVI. But so you start with if I start with that premise, then you may have investors who are based in Europe and they just like European funds. Or you may have investors who want certain restrictions on the way that a fund operates, and they like the way that the European model is more restrictive or more explicit in the way that you have to manage your fund. I don't feel that makes it any better. It's just a list of checkboxes that have to be done and methodologies that have to be applied. Some people like that, so there may be a non-European investor who likes that sort of explicit control model. You can build the same sort of model and probably a better one by doing it yourself with a Cayman fund or with another jurisdiction. That's the way I preferred to do it. But it's just about what the investors want. And if you think you're marketing to, I must have a European fund, all the investors are there. Look carefully at where your investors are. If they're in Switzerland, they're obviously not in Europe. If they're in the UK, well, soon that won't be in Europe either. So what are the countries you're looking at? So if it's just because you think that that's where the money is, look carefully, because you have to understand exactly who they are, those investors. Do they want to speak to you? Are they going to be investors? And that's got to be where you start. It's very easy to just to start with Cayman as your default. Then if you find that you have investors who want or need Europe, you add a European fund. Simple as that. So trying to work out at the beginning one size fits all. So let's stick a pin in the map and go for one of these. Isn't the way I would do it. I would keep it simple. Understand that the Cayman's your default. If you're not doing Cayman, why you're not doing Cayman? And really, you've got to get to your investors. You've got to get what they want as a product. So when I was setting up many funds a year, those would be in different jurisdictions. It could have been BVI as a fund. It could be in Cayman as a unit trust, because then I can do distribution into Japan. So it could be a Delaware feeder, so that I can bring things in. It could be a Delaware feeder with a blocker, so I could bring ERISA money in. All of these things were because of the investors and what they want and what sort of cash they were bringing in. And that's it for me. You've got to start there. That all the jurisdictions that we've talked about, they are all very capable. They all have great products. They all have great providers. But it's really, you've got to work out what, with your situation, where do you start? And that's what I do. I work with all the providers. I work with them all now, so I have to keep friends with all of them. So I'm not favoring Cayman. They're all my friends, but yeah, and I do know them all very well. But that's the way I start, and that's the way I interact.
Perfect.